You are listening to the Love and Money podcast, and today I have a very special guest, Brian. Thank you for being on the show.
Man, thank you for inviting me. Look, I'm looking forward to the conversation.
Okay, Brian, can you tell us a little bit about your childhood and what you saw or what you didn't see as relates to wealth building?
Yeah, so for those who don't know me, Brian Robinson, I have a CPA background, and I do some cool things regarding entrepreneurship and real estate as well as car rental space. So growing up, I came from a low income background. I was born in Harvey, Illinois, which is in the south suburb of Chicago. And growing up, I was very shy. I was very reserved. I didn't really have a household that encouraged like self confidence and things of that nature. So that was something I really struggled with. So then when it came to wealth building, being that we was in a lower income um, whole community, I saw everyone pretty much doing the same things with their money. So everybody was overspending, everybody was in debt, everybody was living check to check. And I think that's really what caused a shift in me because I realized I never really created my own financial identity. All I did was repeat, what everyone else was doing. So in regards to wealth building, that's really what I saw, and that's what caused me to make that change to actually, create a financial identity that wasn't rooted in poverty, but was actually rooted in, wealth.
Okay. Um, so you mentioned you have a CPA background. Could you tell us a little bit more about who you are and what do you do?
Yep. So I started my career as an auditor for one of the big four accounting firms, PricewaterhouseCoopers. So I worked there for about 2 years after getting my degree in undergrad from Northern Illinois University. And yeah, so I was a certified public accountant for 2.5, 3 years. And while I was there, I was creating my own businesses on the side. So now I have a fleet of rental cars. I flip houses, renovate houses. I have my GC license, and I also teach people how to rent cars as well as how to house hack real estate. So that's what I'm doing now. But early on in my career, I was at a 9 to 5 while working those side hustles. So I stayed in corporate as an auditor for 2 years, and then I moved to property accounting role slash financial analyst role for a commercial real estate developer. And then March of 2020, when the pandemic hit, I actually got laid off. So now I've been a full-time entrepreneur for the past, what is it now? A little over a year and a half.
Okay.
Yep, yep.
Well, I think that's pretty impressive that you were working a job and doing hustles like so early in life.
Yeah, it was hard. Honestly, it was hard at first, but luckily, I chose some streams of income that was a little bit more passive. Like real estate, the way I was doing it was not super active because I'm house hacking, so I'm just letting my tenants pay down my rent. You have tenant concerns here and there, but it's nothing too crazy. But I did have some really tough times. They used to work us, man, in public accounting. Sometimes during busy season, which is like January, like basically now until April or May, you can be working like 60 to 70 hour weeks, depending on, what actually field within the county you're in. So it was crazy, but I knew I had to grind every single evening if I wanted to, reach my goals and get out of the rat race. So I just did it. I just put in those hours every single night and it worked out.
Okay. So how did you even get the idea of getting out of the rat race? Because it's a lot of people that are not even aware of that idea.
So for me, I realized after my first year in corporate that it wasn't for me. It's crazy because when I was going in, I was saying, "Oh, I want to be a partner at the firm." That's like working there for like 10 to 12 years, right? And then, after a year, I worked my tail off, and then we had this rating where you get evaluated against your peers for your bonuses and things of that nature. So I was rated at tier two, which is like right under the first tier. And I realized that it was all kind of BS. It was all corporate politics because your performance was just the baseline. If you didn't have those relationships, then you wouldn't necessarily be rated, a little bit higher. So that's when I realized that I had to get out of this, same cycle of getting up, spending 2 hours commuting or an hour and a half commuting to work, and an hour and a half commuting home. So I'm losing 3 hours of my day. And then I'm giving them 8 hours on a regular day, 12 to 14 hours during busy season. So that's when I realized I wasn't really getting to live my life because I was in this rat race. And that's when I ran into the book Rich Dad Poor Dad, and that kind of just confirmed my beliefs. And from then on now, I just decided I can't rely on them. I have to make income on the side if I really want to live life on my own terms. So it was all about that freedom. That was my biggest motivation.
Okay. So you read Rich Dad Poor Dad.
Yep.
Um, so Brian, tell us a little bit about your first real estate experience. And yeah.
Okay. So my first real estate experience was purchasing a multifamily building in Chicago. So it was a 2 unit building with a garden unit, meaning the basement was a unit itself as well. So it's basically a 3 unit building, but not a legal 3 unit building. So what I did was, I bought it for 140 grand. And I actually did what's called a 203K loan, where you get to include um, whatever the cost of repairs is, you get to include that in the actual loan balance. So I did some minor cosmetic renovations to the place where, sanded the floors down and stained them, painted throughout. I totally rehabbed the kitchens and the bathrooms. And then from there, after the rehab was done, I went ahead, and rented it out. So I actually live in the basement and I rented out the top 2 floors. And, my mortgage and taxes, insurance, and all of that only came out to, I think it was like 17 or $1,800, and I was bringing in $2,100 in rent. So it was super dope because I'm living there essentially for free, and I'm still profiting about $300 every single month, and that allowed me to invest way more because now I eliminated my biggest expense. But it wasn't easy. I wouldn't even say it was easy because it was my first time managing contractors and all of that. And I actually had a bad contractor who I almost ended up firing. I actually ended up doing a little bit of work myself, and then I subbed out, some of the work, not relying on my contractor too, because he wasn't as experienced as I thought. So it was a lot of headaches, just going through that. But it was worth it in the end. It was definitely worth it in the end. The tenants weren't crazy, but I definitely had some interesting tenant experiences for sure. But I ended up selling that building in December of 2020, and so I ended up buying it for 140, put about 50 grand in repairs. So I was all in at 190, and then I ended up selling it for 300 grand. So it turned
Wow.
out to be, a really good experience.
Wow. So you started out house hacking.
Yep.
Um, you mentioned the 203K loan. Could you explain that a little bit for people who are not familiar with that?
Yep. So 203K loan is a subset of the FHA loans, which are basically loans for lower income folks. So they require a much lower down payment. So just like a FHA loan only requires 3.5% down, the 203K loan only requires 3.5% down. But the caveat is, if you want to do any type of renovation, whether it's small cosmetic or is it full scale rehab, you can include all those costs in the loan. So if you want to buy a building for 80 grand and it needs 150,000 in repairs, you would finance all the repairs amount and then pay a down payment on the purchase price plus whatever the total repair amount was. So it allows you to get a property that needs a little bit of work, a pretty decent price, if you can negotiate it, and then you just pull all the rehab costs in there, get the renovation done, and then you have a lot of other options because you're probably going to build some equity doing a renovation, and then you can either pull out that equity via cash out refinance, leave it in there, do a home equity line of credit, whatever you want to do. But I always advise people to build some equity because, man, these turnkey properties out here in Chicago, the prices are crazy right now. They're crazy. But yeah, that's why I really like the 203K loan product.
Okay, Brian, I'm gonna switch over to the car rental business. You're in the car rental business also.
Yes,
So,
ma'am.
so tell us a little bit about your car rental business.
Yeah, so man, getting into the currency business, I actually started prior to starting real estate. So I was actually looking for real estate for a couple of months, couldn't find anything in my budget. And that's when I ran into one of my friends who was doing a car rental business. And at the time, I was working about 70 hours a week, at my CPA job, and it was ridiculous because I wasn't actually using my car at all, except on Sundays. And this car was costing me $500 a month between my car note and my insurance payment. So once my friend introduced me to the car rental business, I went ahead and threw my car on there right away. And my first experience, I actually got it rented out for 36 days straight, and I made $1,200. And it was dope at the time because I had these overhead of $500, so I cash flowed $700 just in my first month. And that's when I kind of knew that this business was crazy. It had a lot of potential. And then from there on out, I started buying more and more vehicles until my fleet grew to about 18 cars.
Really?
Then I started to scale back a little bit. But man, car rental business, honestly, it really changed my life because it was an opportunity where you don't really need, a ton of money to get into it. You can get into it, with $1,000, $1,500, and you can scale very, very quickly if you know some, creative financing strategies. So I'm super grateful for the car rental business, and now I help other people, get into the car rental business as well with my car rental blueprint. But no, I really, really enjoy working in the car rental business. I just bought another Tesla like
What?
2 weeks ago. So I got two Teslas. Those probably are my favorite cars in my fleet. They're so great to drive.
Okay, I'm just curious. Starting out, do you have to have a specific type of car? Like they have specific rules and regulations, like what year car, things like that?
Yeah, so it's going to depend on first and foremost the platform that you're on.
Okay.
I mainly teach about two different platforms. One is called Turo. One is called Hire Car. So Hire Car is going to be more suited to people who want to drive Lyft, want to drive Uber. They're basically using people's vehicles to make money. Then on the flip side, you got Turo, where most people are using it for short trips, vacations, things of that nature, traditional rental cars in a sense. So when you're thinking about a platform like Hire Car, where people are using your vehicles to make money, they're going to want to have your vehicle for a little bit longer. So you really want more of like an economy car, like a Toyota Camry or something like that, where people can put a lot of miles on it, but it holds up well, it drives really well, and it's very efficient. But on Turo, that's when you can get to a little bit more luxury. But as far as like the actual car requirements, most times they can't be older. The vehicle can be older. It can be 15 years or older. And then Turo actually has mileage restrictions where I think you can't have more than 130,000 miles when you first listed on the platform. But if you list it before then, and then it gets over 130,000, you're fine because you're like grandfathered in. But Hire Car doesn't have those type of mileage restrictions. They just have the year restriction. Then depending on your state, there's some additional restrictions as well. But it's a lot of options to have, solid rail cars.
Okay. And how much money could somebody starting out expect to make? Like if you just
So so it's always going to depend on, the location, what vehicle you have, et cetera, et cetera. But typically I'll say for an economy vehicle, you can make anywhere from $400 to $700 cash flow. That's after all expenses. But then when you get into more luxury, let's say a Tesla, then that's where you can cash flow, 1 to 2 grand a month.
okay. And why do you like this business?
And I really love it first and foremost because anybody can do it for the most part. Anybody can do it. It's not really tough and it's very passive. Like I don't spend a ton of time working on the business. Like let's say I have a renter coming to pick up a car today. Well, I can do one or two things. I can either go take it to the car wash myself and clean it out and spend 30 minutes and be good and ready, or I can pay someone to do that. But 30 minutes to make a couple $100 is well worth it to me. So you don't spend a ton of time, you don't invest a ton of money, and you don't even necessarily need, great credit to do it. Because one thing I did early on in my car rental business was I leveraged other people's credit because, I was trying to buy a house. So I couldn't be buying a bunch of cars and having a bunch of inquiries or a bunch of loans on my credit because that would increase my debt to income ratio. So I actually partnered with other people and we would just leverage their credit to get the vehicles and then split the profits 50-50. So that's what I really like about it, man. You don't need a ton of capital. You don't need a ton of time, and you don't even have to use your own personal credit if you don't need to or want to.
Okay. And so you teach other people how to get into this. What are some of the things that you teach?
Yeah. So first and foremost, we always cover like, what's your why? I think in any business venture, you got to have an understanding of why you're getting into it. Otherwise, like when adversity hits, you'll probably be more inclined to quit. Then after that, we go into everything you need to know as far as starting your business. So how to structure your entity right, your LLC, how to even create a low risk name. So when you're trying to get financing for this business, you're not flagged as being a high risk. Like, a lot of people don't even know if you have like investments or real estate or something like that in your business name, you can be flagged as being high risk and be a little bit tougher to get finance. So after you get your entity set up, we'll go right into analyzing the market because you have to have an understanding of what cars are already working in your market, what are the top 10 cars in your market, and from there, all you have to do is be able to analyze the numbers and find a good deal and get that vehicle on the road. But we'll cover everything from acquisition strategies, insurance strategies, making sure your listing on Turo or HireCar is very attractive so it can get booked, as often as possible. We cover how to run the numbers as well. That's very important. You got to be able to analyze a deal and make sure the car is actually going to make money before you actually buy it, so you're not guessing. And then we'll cover how to automate the business as well, because we're heavy on systems in our business and we're going to make sure that our students are too, to make it more passive. So we'll teach you how to automate, the messaging. So confirmation messages to all your guests, check-in messages, how to automate your pickup drop-off process, and so on and so forth. Then we go into scaling, financing, and things of that nature. We try to cover all the bases. That's why we call it the Car Rental Blueprint, because it's try to be all encompassing of everything you need to not just get started, but to scale and really run the business very efficiently.
Okay, that sounds good. So, Brian, what is your favorite book?
Oh man, right now my favorite book is probably Secrets of the Millionaire Mind. It's a really great read that I read very early on in my I would say my financial blueprint journey, where I was really trying to change from that poor mindset to that wealth mindset. And I really like it because it really breaks down the differences in how the poor versus the middle class versus how the wealthy think. I think that was huge for me because I was basically getting to see all the bad habits that I had not only I had formed, but that I had picked up from everyone else around me. And I was able to do exactly what the wealthy do, and it really worked out. So man, I would really recommend, anybody starting their financial journey to read Secrets of the Millionaire Mind. It's a really great read.
Okay, I have to check that book out. I have not read that book.
Yeah, it's a good one for sure.
So, Brian, where can people find you if they want to reach out to you?
Yeah, you can find me on Instagram and Twitter at the infamous CPA. Those are the two biggest platforms that I'm on. And if you're interested in getting into the car rental space, we're actually hosting a free webinar January 9th. You can go to carrentalblueprint.com/webinar, and you can sign up there. And then you'll get email notifications on when we're going to actually start and things of that nature. But yeah, you can find me on Instagram and Twitter at the infamous CPA.
Okay. And the last thing is, did you have any last words to leave for the audience?
Man, going into 2022, man, the biggest piece of advice I have is to really believe in yourself. Like anytime, you're starting something new and you're fearful, push through that fear. Like just really believe in yourself. Because once you have that solid belief in yourself and your core and your heart, you can really do anything. Because a lot of people talk themselves out of opportunities because they doubt themselves. But once you believe, you can do way more than you even realize. So believe in yourself all 2022 and don't live in fear.
Okay, Brian, it sounds good. Thank you for being on the show and sharing your story.
Man, thank you for having me on again.